Good morning and welcome to Invest Blue Canberra, where we're bringing you the 2021 federal budget update. There is no doubt that this budget update was about a big spending budget designed to continue to help Australia propel out of the post-COVID economic slump, and there is no doubt that we are well ahead of the rest of the world in that regard. We're coming to you where it's a positive 8 degrees this morning. The sun is shining, and that's a lot more than we can say about the federal budget deficit, which is forecast to be down around $600 billion as we move forward in the estimates. Now, having said that, it is a big spending budget designed to help Australia continue to recover, which we're doing much better than a lot of the rest of the world in a post-COVID environment, boost infrastructure and also support for essential services. One of the big winners and long overdue out of this federal budget is for women's services, allocating around $354 million to new health and screening services, over $1 billion over the next 4 years to help with family and domestic violence situations, including up to $5,000 grants to help women fleeing from difficult and domestic situations with furniture, rent, and also other legal expenses. In a move to help single parents move into the housing market, up to 10,000 recipients will be able to buy a home with only a 2% deposit. Now, bearing in mind there are still going to be some cash flow and finance issues, and you should definitely seek advice from us in relation to that, but it will certainly help people trying to get out of violent relationships. In relation to superannuation, no real new announcements. Most of it was leaked all before the budget speech. However, there are some things to recap. The superannuation guarantee will be going up from 9.5% of your gross wage to 10% from the 1st of July. So that will help boost retirement savings. The $450 minimum cap on superannuation contributions to be paid by employers is also being scrapped in a move to help women accumulate super and also younger people within the superannuation system. Don't forget that as we move towards the end of financial year, the superannuation contributions need to be made by, say, mid-June to get up to your $25,000 tax concessional cap. That cap is increasing from the 1st of July up to $27,500. So that'll be a time to readjust salary sacrifice and contribution limits going into super. Also increasing is the personal contribution cap up to $110,000 per annum or $330,000 if you use the bring forward rule. What's also going up is the superannuation maximum cap. So that's the maximum amount of tax-free super you can have in a lifetime, going up from $1.6 to $1.7 million. In a really great move, we're seeing the home downsizer contribution age limit decrease. Was at age 65 coming down to age 60, meaning more people will be able to access a $300,000 contribution into the super when they downsize their home and they've owned it for more than 10 years. Now, remembering that's $300,000 each if you are a member of a couple. The small business concession retirement cap remains at $500,000, so no changes there. In a really great move, there's also the abolition of the work test for people aged between age 67 and 74. So you will have a lot more scope to move money into superannuation in the event of, say, an inheritance or selling some other assets without having to pass the work test. Unfortunately, that doesn't apply if you want to claim a tax deduction on those contributions. You will still have to make the work test there. In the aged care sector, a big spend, which is fantastic to see. It's definitely been underfunded in our opinion. The industry thinks that it needs about a $10 billion spend per annum, but at least what we're going to see is $17.7 billion over the next 5 years go towards aged care. Particularly 80,000 extra home care packages, bringing the total to around about 275,000 packages over the next 2 years. Now, look, there's 100,000 in the queue, so again, a little bit underfunded, but a really positive step in the right direction to have more people being able to access aged care services in their own home. Finally, on the tax front, the low and middle income offset will remain for another 12 months, giving you an extra $1,080 in your tax return, doubling up, of course, if you're a couple in the household. And finally, it's pretty clear it's going to be quite some time till the Australian borders reopen and we can travel freely. So perhaps one way you might be able to celebrate is alongside the micro brewers and the boutique distillers. They will be pouring themselves a very stiff G&T this morning when they wake up to realise that they will be able to get back up to $350,000 in tax paid to help with their own infrastructure and development. So from Invest Blue Canberra, cheers.